talk to us about why. What was the driving force of this deal, and how does it add to what you're trying to do at HPE?
Hi, Emily. Thanks for having me today. Super excited about the announcement today. The main reason why we decided to pursue this acquisition is because the data around us is exploding. And that data has value, and the need to process that data faster continues to grow. And the need for high-performance computing is one element of processing data faster. So the combination of Cray Technologies with Hewlett Packard Enterprise portfolio, both HP Apollo and as well as SGI, give us a unique set of capabilities to accelerate business outcome from that data. And workloads we are talking here about, Emily, are machine learning, AI, as well as big data-intensive workloads that require these capabilities.
So we know Cray has supercomputers. They've also got major government contracts. Is there anything in particular that's attractive about those government contracts?
Sure. Cray has two-thirds of the business going from the government side, one-third from the commercial. Hewlett Packard Enterprise is the opposite, two-thirds from the commercial side, one-third from the government side. And obviously, the government has already requested to Cray to build an exascale computing. And that's on the basis of the foundation technologies that Cray has developed for some time, which is what we call the interconnect fabric. And so for us, that level of innovation is important to scale our portfolio and continue to enter new markets like oil and gas, manufacturing, as well as academia.
Now, HP, the former HP before it broke up, was famous for making some not-so-smart acquisitions, Autonomy, a big one, being one of them. Cray's gross profits have fallen over the last couple of years, and they forecast a substantial net loss. How does that impact HPE's bottom line?
So I have done now, Emily, 13 acquisitions with this one, and we have had an incredible discipline based on return on invested capital, where we add intellectual property as well as talent to the organization. And each of them has been very, very successful, including Aruba Networks, as well as what I call the SGI acquisition, Nimble Storage, and so forth. They have been all very successful. For us, you know, if you think about this type of business, obviously has been a little bit lumpy on the Cray side, but that's because it takes time to build the systems with CapEx up front, and then acceptance on the back end to recognize revenue. So we believe the combination of Cray at our scale, which is significantly larger, will smooth that transition from the revenue profit perspective and also limit the CapEx investment, because both companies have similar capabilities, and now we can use both in a scale way we couldn't do before.
Now, I got to ask you about what's going on in the markets. There is fear that trade talks between the U.S. and China have stalled, that we are going to be plunged into a Cold War with China. The markets have been roiled by this. How concerned are you, and what about the impact potentially on HPE?
Well, listen, we obviously want an open market where everybody can innovate and participate. Obviously, this situation with tariff and global trade is a concern because it actually creates uncertainty, and it could slow down the economy. Now, we believe the sooner we solve that problem, the better it is. But there is demand out there driven by the need to process data, the need for advancing what we call the way people live and work. But obviously, solving this problem is fundamental for stability and confidence, both on the customer side and on the market side.
Now, clearly, there's still a lot of uncertainty here. Are you mapping out internally different strategies? Let's say a deal doesn't happen. Let's say we go into a Cold War. Are you mapping out next steps? And then on the other hand, let's say, you know, President Trump and President Xi come to an agreement and things go back to normal. How are you navigating these decisions internally?
Well, obviously, we continue to monitor the macroeconomic environment and making sure we have the right strategy for each of the markets. We have a unique setup in China. I don't know if you recall, Emily, but we had an asset there where we participated with a joint venture with a Chinese partner of us. We own 49%, and that has unlocked significant value in China. We believe that's a smart way to participate in China because obviously being more Chinese than U.S. is what it takes. In the meantime, obviously, this is a good return for shareholders. But for us, looking at where we build our products, how we procure components, the entire supply chain is something we assess on an ongoing basis for cost, for scalability, for protection, and ultimately for ability to serve our customers in the time frames they need. So obviously, we have alternative plans depending on how this is going to evolve. But right now, we feel very confident that we have the contingency plans in place to navigate through this.